In this video, I'm going to take you through the data sources in the profit and loss fully configurable template so that you can assess how easy or difficult it is for you to adapt this to your own particular data sources that you have within your environment. So firstly, if we take a quick look at the data model, the data model looks like this in the data set. These are the main tables, the active tables. There's a whole host of disconnected tables within the model that's not our concern at the moment. And we have a journals table for dimensions. We have dates, partners, departments, projects, and accounts. And then we have a chart of accounts table that effectively defines the rows within our income statement, and a bridge accounts table that resolves the many-to-many mapping that occurs between the rows of the chart of accounts and the accounts. So these are the main tables, and our source data would be a list of journal entries, which is fairly typical of journal entries that would come in from a lot of accounting software. We'll take a look at that in a minute. We also have a folder of budgets that form part of the journals as pseudo journals, and we'll take a look at the budgets spreadsheet that contains the budgets for, in this case, 23, 24, and 25. For our dimensions, we have, in this table, we have partners, but our source data are customers and suppliers. And we've got two separate tables for our customers and suppliers. And we also have dimensions for departments and projects, and these are also separate tables that come in to the report. And we have a table of accounts, which is basically a list of the general ledger accounts and the balance of the accounts. And then there is an external report metadata sheet that we'll take a look at that defines the layout of the chart of accounts. And in this particular template, we've got two different layouts defined. So you can configure the chart of accounts by defining your charts of account rows and configuring the mappings of those to the individual accounts. And the dates table is generated automatically within Power Query based on parameters that are put in for the year-end month, for example. And the source data that would be fairly typical coming from your accounting software is a list of accounts, a list of journal entries, a list of customers, a list of suppliers, and in this case, a list of departments and projects as additional dimensions. So we'll take a quick look at the source data now. Okay, so that comes with the template is the accounting demo data workbook. And the tables in the workbook would be a list of journals. I've called it an audit journal table. And this is actually based on Sage 50 accounts data, but it's very typical of the kind of journal entries table that you'd find in any accounting software. In this particular table, we have a department number and a project number, which are dimensions on the journals table. We have a nominal code column, which is a text-based account reference, effectively, for the journal general ledger entry code. We have a type, which is a transaction type, which is not needed or used actually in the profit and loss report. It's used in other reports such as cash flow and balance sheet. We have a header number, which is just an attribute of the transaction lines that have, or the audit journal lines that have come up. We don't use it in the report, but it's fairly typical. We have a transaction number, again, that we're not using in the profit and loss report. There's no need for it. We do need it in the cash flow report. The account reference, which is a unique account code for the partner. And basically what we've done here in the data model is anything beginning with S hyphen is a supplier and anything beginning with C hyphen is a customer. We've got the date of the journal, and we've got a details column and an amount. Now, the details column in this particular data set is important because we need to identify those journals that are year-end transactions, as in the year-end transfer from the income statement to the balance sheet. And it's essential that somewhere within the journals table we can identify that. Some accounting software would have a separate column that we could use to filter out the year-end journals. In Sage 50 accounts that this data set is based on, it's in the details table, and there's a text that Sage automatically writes in there called Ledger Year-End. The important thing is that in your own data set, you will need a mechanism for filtering out the year-end journals. So that's the list of journal entries. Then we have the nominal accounts, which is basically a list of account codes, a description, in this case the field is called name, and the balance. And then we have a list of departments, which is a list of department names and a department number. Same as projects. And then we have a list of customers. We have the account reference, the name, and then there's other attributes of the customer. Now, in the income statement template, we only use these two columns, the account ref and the name. And likewise, on the suppliers, we use the account ref and the name. We're not actually using these other columns within the dataset, but these are fairly typical columns that you might find coming out of your accounting software. So, as I mentioned, we also have budgets, and the template reads a folder of budgets, and it's picking up the fiscal year from the name of the workbook in the folder. So here it's picking up, this is fiscal year 25. And basically we have a list of the account codes. This budget is maintained at account level. And the chart of accounts is defined on 3 levels, the top level being group, then category, and then account code. And then we've got the budgets for period 1 through to period 12 for each of the account codes. So that's the structure basically of the budgets. And then finally we have the report metadata sheet that defines the chart of accounts. And it's probably easier if I start with the first table, which is what I call the custom chart of accounts rows. And here we've got 2 charts. We've got chart 1 and chart EBITDA defined. You can define whatever name you want on that. We've got a column called report, which in all cases, in this case, is PL, but when we extend this to incorporate balance sheet, there'll be BS, or cash flow will be CF. And then we have a group ID, which is effectively the sort order for the group, and the group being the top level on the chart of accounts. So we have sales, and then we have a category, say product sales, export sales, and so on. At each level, we kind of have 3 attributes. We've got the name, we've got the ID, which defines the sort order, and we've got a reference, which we can use internally within our DAX code, should we need to, or within the definitions of different ratios and things like that, that is then independent of any label that we might actually put on the report. And we do the same at the category level. So we've got the category ID that is the sort order, the category ref, and the category. Then we have this idea of a group class that on the income statement is either income or expense or mixed. So mixed in the case of things like gross margin, where you've got income and expense. We have a display multiplier, which is just a bit of metadata to flip the sign, basically in this case, to flip the sign on the expense lines. So they'll display as positive values, and we have the same for ratios. We have a merge index, which is just a merging column to merge with other tables. We have blank rows defined within a chart. So a 1 means it's a blank row. So that's these rows here, and that corresponds to these blank rows here. Okay. There is a column there called flag BSPL. It's not actually used in the income statement report, so we can get rid of that if we want. And we have flag floating, also not used, and flag cash. These are actually used for the balance sheet and cash flow definitions. And then here is where we define the calculation that's been done on each row. So if we take this first row, which is product sales line, what we're saying is it's a regular subtotal. So by regular subtotal, I mean it has a natural hierarchy. So this is not triggering a kind of many-to-many relationship. It's a regular aggregation, just summing up the constituent accounts. And we're doing aggregation at the account level. And the numerator is basically this range of accounts. So if you want to change the accounts to fit in with your particular chart of accounts, then here's where you change it. And because it's just a regular sum, there's no denominator. And that's defined all the way down there. But what we also then have is we've got some ranges that are defined in the context of a generic range. And the idea of this is to provide a single point where you're defining a range of accounts that you may use in multiple places within your chart of accounts definition. So if we go here and we look at especially the gross profit calculation, and the way this works is we've got the line at the top that's producing the gross profit, and then we've got the category level that's showing the gross margin as a percentage. So it's a mixed class, and what we're saying is the calculation is an irregular subtotal, and I've got a many-to-many relationship going on. So this is why we need the data model and the structure that it is. It's a percentage calculation. So in our DAX code, we know when we're on this line, we want to format it as a percentage at the category level. We're aggregating using generic ranges, and the numerator is a range called income regular and expenses gross profit, or expenses GP, and the denominator is income regular. And that's basically how the metadata works for the chart of accounts. So basically what it does, it provides you with a really quick way of adding custom rows and custom lines and custom subtotals into your report without actually modifying your DAX code at all. Then we have account class definitions, and this is just the generic ranges for what's income and expense on the income statement. If you're extending this to balance sheet, then really include assets and liabilities and equity as well. And then here we have the generic ranges defined. And this will obviously be specific to your own setup and your own accounts. But what this provides you with is the facility of, let's say in your chart of accounts within your own system, you've got a bit of a spaghetti code of your account mappings. What this provides you with is basically the facility to do any mapping you want within your chart of accounts. And as you can see, sometimes it gets a little bit complex in terms of all the individual ranges that have been included. So we need to provide some kind of check to make sure that we've done our mappings correctly. We actually do that in the report. So if we go over to our report, here we've got a page which is just income statement check. And we're presenting basically our list of income statement accounts as rows within this matrix, and then we've got the columns, which are the groups within our chart of accounts. And we can select which chart of accounts we're looking at. We've got two charts defined, and we can say, are we looking at all the subtotal types, or just the regular, or just the irregular? It's useful to separate them out. So we take a look at the regular subtotals. On the income statement, basically what we're wanting to make sure of is that every single account is mapped to one of the main groupings, and only one. So that's basically what we're showing visually here. And basically we want to make sure that this total column down the right hand side is 1 on every row. And that tells us we've mapped every account somewhere, and it's only mapped once in terms of our regular subtotals. Then if you want to look at our irregular subtotals, I've got two irregular subtotals defined in the report. One is gross profit and the other is adjusted EBITDA. And here I can see visually what accounts are mapped to both of these. And it's a very quick check to validate is that correct. So as you can see, within the configurable income statement template, firstly, we've got our source data, which is pretty typical of the source data coming from most accounting and ERP systems. We're basically looking at the general ledger GL entries table. And that's our main journals table. And then we're looking at a list of accounts and then other dimensions that may go around that. In this particular report, we've got partners, which is a combination of customers and suppliers. We're taking customer table, a supplier table, and we're also in this particular case taking departments and projects. And then to compare against budget, we're also bringing in a budget spreadsheet or budget workbook, in fact, a folder of budget workbooks with it's set up so that it assumes that there's a budget workbook for every year, and each of those budget workbooks are maintained in a common folder.